Hi guys, it's Ariel here from Fix My Books, and today we're going to talk about the top 5 problems businesses encounter during tax season. Okay, so number 1 is last-minute bookkeeping. Number 2, not monitoring the shareholder loan account. Number 3, there's no planning till the taxes are due. Number 4 is not thinking about personal taxes. Number 5 is not understanding business margins. So number 1, last minute bookkeeping. So get your bookkeeping done regularly. Okay, so giving us 2 weeks before the deadline to do the bookkeeping and file your taxes is not enough time. So tax season is very, very busy, not only for individuals, but businesses as well. So it's very hard to do, a full year's worth of bookkeeping in 2 weeks when there are other people already in line for work, right? So if you're coming in 2 weeks before the deadline, that's not early at all, especially with people like us who have, regular clients, then we have, tax time clients. So if you're coming in expecting this will all be filed on time when it's last minute, it's going to be very, very difficult, right? Because there are also other people in line, not just the regular clients, but the tax season clients. There are some that we meet just every year for tax season, and those are already ahead. So if you really want to get your bookkeeping and your taxes filed on time, make sure you're, a month and a half to 2 months early at least, because there are, other places that may be able to do it, in that short notice. But from my experience, it doesn't get done correctly when it's super last minute, as well as there's really a lack of bookkeepers and tax and accounting professionals here in Canada. So it's very hard to find a good one because there's not many of us in the first place. There's a lack of supply of tax and accounting professionals here. So number 3, missed expenses are very common as everything is rushed. So if you are trying to do your bookkeeping last minute, right? Like even though you have bank statements, like your business bank statements, there are still some expenses that you paid for using your personal funds. And if you're rushing, you don't have time to go through your personal bank statements to find those. So you're missing claiming them on your tax returns. So that's a really sad issue because you could have gotten those business expenses claimed, but because it's last minute, you just forgot, right? Next, not monitoring the shareholder loan account. So the shareholder loan account, I've talked about this in my previous videos, where every time a business owner takes money out of the corporation, it goes to a shareholder loan account. Basically, it's the money the shareholder owes the business, and then it's tallied up at the end of the year, and it's either payrolled out or dividended out. So that I have a video on that. I will link that down below or put a caption here if you want to see that. But again, business owners often don't realize how much money they've taken out of the business until the year end. So this is the thing. If the loan is too large, you've taken too much money out, and you'll have to pay either payroll taxes on that or dividends, then you still have to pay personal taxes on that money. And most business owners I know don't think about that, don't think about, having savings for that type of tax liability during tax season. So number 2, personal expenses you paid for using company credit cards or funds go into your shareholder loan account. Again, that's what I mentioned. All the money that you take out, personal expenses that the business pays for you, goes into the shareholder loan account, and then it's tallied up at year end. So again, it has to be lowered either by payroll or dividends. And again, business owners don't realize how much tax they need to pay. Number 3, no planning till taxes are due. So it's very similar to the issue that we found with individuals where they don't plan anything until taxes are due. Same thing with business owners. So if the shareholder loan account that we talked about previously needs to be payrolled out to the shareholder, then a way of minimizing personal taxes is through contributing to the RRSP. But if you've missed the contribution window, again, because you didn't plan anything till the taxes are due, then there is no other way of lowering your income taxes owing, right? Next is not having money saved up to cover any potential tax liabilities for both personal and business, right? So once we're filing the taxes at the end of the year, and then the business owner sees, okay, this is how much I owe in HST, this is how much I owe in corporate taxes, payroll taxes, and then their personal taxes, they realize they've come up short. So there are a lot of taxes that you need to pay with a business. So it's very, very important that you have money saved aside. Take a small amount of money throughout the year, save it in a savings account so you have some funds during tax season to cover your tax liabilities. Next is not thinking about your personal taxes. Again, it's related to the shareholder loan. So payroll and dividends, as we mentioned a while ago, either way you will have to pay taxes. So again, this is something that business owners don't think about. They only mostly think about corporate taxes owing. But really, it's not just corporate taxes. There are a lot of different taxes that you need to pay. So again, when we dividend it out or payroll it out, some people don't think, with dividends, they have to pay the taxes on those dividends from the funds that they have personally. Right? But when it's payroll, obviously the income taxes are deducted before the net pay is given to the business owner. So that makes it a bit easier. But most business owners that I do know go with dividends, again, because dividends, you pay a lower percentage of your income tax compared to if it was through payroll. So a lot of business owners do prefer taking out dividends instead of taking out payroll. But again, either way, you will have to pay the taxes. So even though you take the money out as dividends, and yes, you do pay less taxes on that personally compared to if it was like on payroll, you still have to pay the taxes at the end of the day. Okay, last and certainly not the least is that most business owners don't understand their business margins. Let me say this right off the bat. If you don't know your margins, you should not be running a business. Watch like any Shark Tank episode and you will see this mentioned in nearly every presentation. And if they don't know their margins, the sharks actually get really angry. So this is something that's very important with your business, because how will you know if you're making enough money to cover like your overhead if you don't know your margins, right? Number 2, a lot of supply chains are in disrepair and we are now in an inflationary environment with rising interest rates. So if the interest rates are higher, then the cost to borrow or the cost of debt is also higher. So if you don't understand or make an effort to understand how this will impact you, your business is going to suffer. So in this kind of environment, you need to understand your margins, because you need to know, let's say you want to borrow $1 million, you need to know if you can afford to pay the interest payments on what you're borrowing at these higher rates. So you need to know your business margins, because you need to know if you have enough cash flow to make those payments. So that's very important. Number 3, if you had a profitable year last year and now your margins are being impacted, will impact your cash flow as well as your ability to go on paying taxes like HST and payroll taxes. So something that I've noticed a lot is that business owners, when the money comes into their account or when an invoice gets paid, they think that's all profit. It's not. part of that, the money that you're getting paid by your clients is also HST, which needs to be remitted to the CRA. And I've seen a lot of people, what happens is they don't set aside money into an account where they save, whatever HST they charge. What happens is all that money just goes into an operating account and they don't realize that they're eating into the cash for the HST that they need to pay. So when they don't have money, quote unquote, in the account, they take the HST money that they're supposed to remit to the government and use that to pay operating expenses. And that is very, very bad. And let me tell you why. Because in Canada, if you declare bankruptcy as a corporation, your corporate income taxes, you don't need to pay that anymore, right? Because you declared bankruptcy. However, the HST and payroll taxes, you are still obligated to pay. So even if you declare bankruptcy, that HST that you owe the government and the payroll taxes you owe the government, you will still need to pay that. And they can go after your personal assets, like not related to the business. It's called like a director's guarantee. They can go after your car, your house, things like that if you owe the CRA, HST, or payroll taxes. So that's a very, very important distinction between HST and payroll taxes versus corporate income taxes. I'm not sure if a lot of people know that, but I've heard about that. I've talked to some HST professionals and that is what I've been told. So just be very careful of your HST and your payroll taxes. Make sure you remit those in full, okay? So if you found this video helpful, please don't forget to like, subscribe, and share this video. And don't forget to hit the notification bell so you always get notified whenever I upload new videos to my YouTube channel. And once again, this is Arielle from Fix My Books, helping you fix your books.